Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is what's moving. The Fed spoke today. Fed Chair Powell, his press conference. I mean, it's risk on. Nothing's really changed, and we didn't expect it to. But what you do have to keep an eye on as the next couple months play out is normalization. How does that play out? Does the demand in the economy play out to be better than expected? Are people back at work? Or does the unemployment rate stay up near 10%? The Fed does think that you're going to see unemployment stay near 10% through the end of the year. They think the economy is going to contract in 2020 by 6.5%. But get this, they do think you're going to see growth of about 5% next year. And to get growth of about 5% next year, we're going to have to see the second half of this year improve. And that's something that we've been talking about. As we move through quarter three and we get closer to September, we do think we're going to see that demand come back online. And that's one of the reasons why we are bullish the U.S. dollar, because we are going to see signs that the Fed is going to have to unwind some of this sooner than they are telling us right now. And that's what's important. The market is pricing in what they're saying now, and in 2 months, that could really change. So keep that in mind. But for now, it is risk on. And even after the Fed unwinds some of this, the markets, there's nothing to say the market won't have a path of least resistance higher. But more importantly, and as traders, what we want to look at is that June 19th quadruple witching and the potential unwind that's going to come from that. We've talked about that at length already this week. I'm not going to go on it again, but we're here to help with questions on that. We would love to talk to you if you want to reach out to us to talk about June 19th, the quadruple witching, what that means, and then on top of that, the quarterly rebalancing, what that also means. So give us a call if you do want to talk about that. But let's jump in. Let's take a look at this NASDAQ chart. Let's take a look at this melt up, and it just continued to melt up above 10,000. The NASDAQ closed. We had a level out there, 10,035 as our next major three-star resistance. Today's high, 10,155. There's no real resistance levels at this point, but we do see the next big area of about 10,500. And honestly, we would not be surprised to see 10,500 by next Friday. Not calling for it, but I'm saying I would not be surprised to see it given the positioning and given the fact that this thing could continue to melt up. So we do have some resistance at 10,200 and change, and that's a little bit of a level there, but out above 10,035, it's about 10,500. We'll get specific in the Morning Express, so take a look at that tomorrow. But the S&P, it did not trade like the NASDAQ. You're seeing the S&P, and I showed you this volume profile yesterday because you can see here how much volume, especially relative to this entire rally that we've seen at this area. And this is why overhead between, anywhere between 32.30, 32.50, and when this selling was incurred, and really this area here too, which there's a lot of volume here. It's a tough area to get through. What it could mean is we could see 32.50 next Friday. But for now, resistance is holding pretty well. The S&P did back off from the highs, but it is a broad risk-on move. And overall, crude oil, this is a 30-minute chart here in crude oil. Just to touch on that real quick, inventory data, the crude oil itself did not build as much as expected. You saw the draws in Cushing. You saw the draws in distillates. 100,000 barrels per day of estimated production fell off. So at 9:30, here's 9:30 right here. Market lifted up from 37.80 area almost to $40. $40 is going to be a big area, a big ceiling. Still, more importantly, you do have the gap from March 9th. I'll back out and show you that. But in our Morning Express, we talked about it. The bulls are back in the driver's seat out above about 39.25. And then, that gap, if you really want to back the chart out here, you see it. This is that line, $42. In the July contract. So that's going to be a lot of resistance overhead there. So keep that in mind. $40 isn't as important as that. So if we stay above 39, it's going to pave a path to get its head above 40. So keep that in mind. But it did leave a tail. This is into settlement. This is from 9:30 into the crude settlement, but it stayed below $40. Watch 39 as we go into tomorrow. Above there, it's a path to least resistance higher. With that risk on, we've also seen Treasuries rally. There's been a strong demand in Treasuries, and the yields got to 90 basis points earlier this week, and they rejected that. It's the support area here in the prices, and it was right where the market ripped back up, right after March 20th, and ran through there. So This is a big area of support. It's near 1%, and the 10 years responding. We have a 30-year auction tomorrow, so keep an eye on that. If the demand stays strong, I mean, what's to say that the 30-year is not going to continue on its path, retesting 179 area, potentially 180 being a round number. And then let's finish off here, jumping into the metals. I think gold is extremely important here to look at. This is the August contract in gold. So you have the trend line here now taken out today. Gold 1745 or so late in the session. Remember though, these Fed Reserve meetings, they are after gold settles. So you always get a move in the next session relative to where it's settled after a Federal Reserve meeting. Don't forget that. So this isn't a tale of failure here. This is a tale of strength, and the new session is going to open up at the top end of that tail, out above this trend line. And now what's important here, again, you have this support area that was held strongly, but what's also really important as you move higher is the continuous contract. So this is the August contract, and continued price action above this trend line is supportive. However, you have to keep an eye on the continuous contract too. The continuous contract does not have that trend line until about 1765. So 1765 is going to be a crucial area, as well as about 1780 because it's double top in the August. So keep that in mind as this market moves up. Now, one thing we were also very excited about today is you had this. Remember, this top part of this tail here in silver is the higher move after settlement. But silver traded to 1816.5. The high here was 1816.5 as well. And before the Fed meeting, and it backed off all the way down to 1770. This move here post-Fed negates what would have potentially been a head and shoulders top. So this is exciting for us as we're bullish silver for a number of fundamental reasons, but we want to see this really, get a second wave higher and push through 1900 or $19. And ultimately, if this was going to be a head and shoulders pattern, it was a very poor development. And if you were long silver, you would have had to start managing risk. But this is a good move here. You can see this again. This is not a tale of failure. This is a tale of strength because it's going to open up right here. And then lastly, we'll leave you with the Palladium. Palladium, you see this 50-day moving average here, the 200-day moving average here. It's consolidating. Palladium is tightening up. It's a tough contract to trade because it's the ranges are huge. I mean, just today in a small range, low 1915, high 1997. And I mean, that's a $100 range. It's a $10,000 range for the contract. There's no minis. There's no liquidity in options. So, ultimately, one of the better ways to maybe play Palladium, given the strength in silver, is if Palladium is moving above 2100, you could see drag silver with it. So, again, if you want to talk about Palladium and some ways to try and play Palladium, we're here to help. We can give you some great levels to work with, but one thing we do feel strongly is Palladium is going to move out of that wedge. We'd like to think it's going to be higher. We'd like to think gold, silver, they're going to be moving here, and today is just the start of that. So give us a call. We're here to help with anything on the board, 312-278-0500. Remember, though, futures trading involves substantial risk of loss and is not suitable for all investors. Thank you.